All right, welcome back to the deep dive. Today we're going deep on Michael Saylor.
Okay.
Yeah, and I think a lot of you will recognize that name, but he's executive chairman of Strategy, a company that many people know as MicroStrategy. And for today's deep dive, we're drawing from a really fascinating CoinDesk interview transcript, where Saylor, I think, kind of lays out his whole comprehensive vision for Bitcoin
Mhm.
and the wider digital asset landscape, too. So the mission here is to kind of extract the most important insights from this and figure out, what does this mean for you
Okay.
as you're trying to, wrap your head around all of this stuff. So, I mean, where do we even begin with all of this?
Well, I think a good place to start is with the core of Saylor's argument,
Okay.
which is this new digital asset framework that he's proposing.
Okay.
So I think the first question is what problems is he trying to solve with this? Why does he think we need a new framework in the first place?
Yeah. And so he seems to be saying that the current way, we kind of categorize everything in crypto,
Mhm.
forcing it into other securities or commodities.
Right.
He says that's fundamentally flawed.
Yeah.
And it's actually hindering innovation. He calls it a source of confusion and conflict in the whole industry.
It's interesting, isn't it? It's like we're trying to fit a square peg in a round hole.
Yeah, exactly.
If the regulatory burden of issuing a security is too high, then everything from a simple utility token to a digital representation of a stock ends up being awkwardly labeled a commodity.
Right.
And it seems like he believes this lack of clear definitions is holding back the entire digital asset space.
Yeah, and so his proposed solution is to create, I mean, it's kind of novel, right?
It is.
He's saying we need 4 new distinct digital asset classes.
Right.
And these would kind of exist alongside our traditional understanding of securities, commodities, and currencies. So we've got digital tokens, digital securities, digital currencies, and digital commodities.
Yeah, it's a mouthful, isn't it?
Yeah, 4 new categories. So let's take these one by one.
Okay.
First step, digital tokens. What's his vision for these?
So Saylor envisions digital tokens as the engine for capital creation and innovation.
Okay.
He talks about, a very low barrier to entry. Almost anyone could create one relatively quickly and cheaply.
Okay.
Think of things like, fan tokens, utility tokens that grant access to a specific service,
Right.
Even meme coins or NFTs.
Okay, so it's about kind of democratizing access to creating digital value
Mm-hmm.
and fostering new kinds of online interactions.
Right.
And this is kind of making me think back to the whole ICO craze. So what safeguards does he propose for consumer protection in this kind of, freewheeling environment?
That's a crucial point.
Yeah.
And Saylor repeatedly emphasizes the importance of issuer liability. So anyone issuing a digital token should be, a registered entity, a real person or company that can be held accountable.
Okay.
They need to clearly define the token's utility.
Mm-hmm.
And, importantly, they should be liable under existing civil and criminal law for any fraudulent activity.
So he's basically saying we don't need entirely new regulatory bodies for this.
Exactly.
The existing legal framework for fraud should be sufficient.
That's his argument, yeah.
Okay, that's a fairly hands-off approach to regulation. It seems to be focusing on accountability after the fact.
Right.
Now, he also mentioned this idea of friction-free circulation for all digital assets, suggesting no KYC or AML at the point of transfer. That sounds like a pretty significant departure from current norms.
It is, and he argues this is vital for the economic benefits of digital assets. To be fully realized, there's speed and efficiency in transferring value.
Okay.
However, he reiterates that the issuer's responsibility for preventing fraud at the outset remains paramount. If someone deliberately scams people with a worthless token, they should face legal consequences.
Okay, so let's move on to digital securities. This category sounds a little bit more in line with traditional finance.
Exactly. Here, Saylor is talking about taking traditional securities,
Okay.
your stocks, bonds, and other financial instruments, and representing them as digital tokens on a blockchain.
So I can imagine being able to buy and sell fractions of Apple stock 24/7 on a global crypto exchange.
Exactly.
Because it's been tokenized by a firm like BlackRock.
Right.
So this is kind of leveraging the technology behind crypto to improve existing financial instruments. What about digital currencies? That seems pretty, self-explanatory.
Yeah, I think so too.
It's all about stable coins and maybe central bank digital currencies?
Precisely. This category, as Saylor defines it, primarily covers digital assets that are pegged one-to-one to a fiat currency.
So like the US dollar stable coins we see today.
Exactly. He highlights the critical need for transparent one-to-one backing and clear issuer liability.
And interestingly, he sees a massive opportunity for the US to essentially export its dollar in digital form through widely adopted stablecoins. It's like digital dollar diplomacy in a way.
It is, yeah.
Okay, and finally we get to digital commodities. I think it's pretty clear this category is central to Saylor's thinking,
Absolutely.
with Bitcoin as the star of the show.
For Saylor, a digital commodity is defined by the absence of an issuer.
Okay.
And Bitcoin fits this perfectly, right?
Right.
As a decentralized network with no single controlling entity.
And so its primary use case, he's saying it's not about creating new capital or like facilitating everyday transactions.
Right.
It's about preserving and growing existing capital.
Exactly.
Hence the whole digital capital.
And digital gold
Yeah.
descriptions.
He positions Bitcoin as a long-term store of value,
Okay.
directly competing with traditional capital assets like real estate,
Yep.
equities, and bonds on a global scale.
He throws out this big number of Bitcoin potentially reaching a $200 trillion plus network valuation. I mean, that's massive.
It is.
Where's the logic in that?
So if we zoom out and look at the bigger picture of global capital markets, Saylor estimates the total value of these traditional capital assets to be around $450 trillion.
Okay.
And his thesis is that Bitcoin, with its inherent scarcity and, other desirable properties, represents the strongest form of money over the long term.
Okay.
And this echoes Gresham's law, the idea that bad money drives out good.
Right.
He believes Bitcoin will gradually attract capital away from these, weaker assets as more people recognize its superior long-term store value characteristics.
Now, I find it really interesting that he seems so confident that there won't be a successful second Bitcoin. What's he basing that on?
The key here is the network effect.
Okay.
Bitcoin has a substantial first-mover advantage, $1 trillion of invested capital, which he calls smart money, and a well-established, incredibly secure network. So he's saying this combination makes it virtually impossible for a new cryptocurrency to replicate its success as a global store of value.
Right.
Okay, now, he does acknowledge that individual nations could theoretically create their own regional digital commodities, but he doesn't see them gaining widespread international adoption in a way that would really challenge Bitcoin. He even suggests that, forks of Bitcoin, if their primary value proposition is also as a store of value, they're likely to fizzle out eventually.
Yeah.
And this naturally brings us to, the national security implications of Bitcoin. This is something he seems to think is really important.
He does, and I think he uses some really interesting metaphors
Yeah.
to illustrate his point.
Okay.
So the first one is this idea of Bitcoin as digital capital. And he suggests that strategic acquisition of Bitcoin by the U.S. government and corporations could fundamentally improve the nation's balance sheet,
Okay.
potentially even offsetting the national debt and moving towards a net asset position. And then he uses the metaphor of digital property,
Okay.
envisioning a future where Bitcoin holdings form the basis of a thriving cyber economy, enabling activities like renting, financing, and building digital businesses, potentially generating trillions of dollars in annual economic activity for the U.S. by 2045.
That's a bold prediction.
It is.
What other metaphors does he use?
So the third one is digital energy network,
Okay.
where he sees Bitcoin's secure and decentralized infrastructure as a foundation for the emerging AI economy and the broader landscape of digital commerce, potentially underpinning a $100 trillion economy.
Wow.
And finally, he presents Bitcoin as a digital defense system,
Okay.
emphasizing its uncorruptible, censorship-resistant nature, fortified by its immense computing power and sophisticated cryptography.
And so this, he's saying, makes Bitcoin essential for secure value transfer and data integrity in cyberspace.
Especially in contested or hostile environments.
So it sounds like his message is, if the U.S. wants to lead in the digital age, it's got to embrace and leverage Bitcoin.
It's exactly.
Failing to do so would put the U.S. at a real disadvantage.
That's his argument, yeah.
And it sounds like the U.S. government's perspective might be starting to shift to recognize this.
That seems to be the case, based on what he describes.
So he talks about this, recent shift in the U.S. government's stance
Mm-hmm.
and a strategic Bitcoin reserve being elevated to a primary priority through a presidential executive order.
Right.
What are the key details there?
So what's really striking is the level of commitment he described.
Okay.
According to Saylor, this executive order specifically designates only Bitcoin for this strategic reserve, mandates a policy of never selling these holdings,
Wow.
and directs the Secretary of Commerce and the Treasury Secretary to find budget-neutral mechanisms for acquiring even more Bitcoin.
That's huge.
It is.
And then he mentions this figure he calls the crypto czar, David Sachs,
Yeah.
making some pretty noteworthy statements.
He does. So Saylor points to Sachs's assertion that the U.S. government now unequivocally recognizes Bitcoin as a sole decentralized crypto asset and as a legitimate store of value, essentially classifying it as a digital commodity.
So an asset without an issuer.
Right.
And he contrasts this with what he says was the previous administration's more enforcement-focused stance.
Right.
And he emphasizes the current focus on establishing clear
And legitimate regulatory frameworks for the other proposed digital asset classes, with a specific timeline for proposals.
So it seems like he's seeing a pretty big shift in U.S. policy towards a more accommodating view of Bitcoin.
Right.
And he seems to think this adoption is becoming irreversible.
He does. He argues that, as major institutions and banks become increasingly invested in Bitcoin, the level of embeddedness within the traditional financial system will make it really hard to reverse course. He uses powerful analogies like Pandora's box is open.
Okay.
And the idea of viral spread to convey this momentum.
Now, while he's pretty optimistic about the direction of government policy regarding Bitcoin itself, he does criticize some current tax and banking regulations affecting the broader digital asset space.
He does. So he describes the current tax policies, particularly those impacting Bitcoin mining, as hostile and irrational. And he makes this analogy to taxing fundamental utilities like fire or electricity.
Right.
And he also criticizes the restricted access to the traditional banking system for Bitcoin-related businesses, arguing that this has inadvertently pushed activity towards less regulated offshore entities, contributing to the failures of some prominent, crypto cowboys, as he puts it.
Right.
So his argument is that allowing regulated banks and established financial institutions to handle Bitcoin would actually enhance security and provide greater consumer protection.
Okay, so he's calling for a more supportive regulatory environment that unwinds these restrictive policies and fosters legitimacy, which he believes would lead to exponential growth and reduced systemic risk. Now, shifting gears a little bit to his long-term price predictions for Bitcoin, those always get attention.
They do. So he reiterates his long-held view that Bitcoin's price will continue to rise indefinitely due to ongoing innovation and the debasement of fiat currencies through inflation. He even references a Bitcoin 24 model he maintains on GitHub, which provides some specific future price targets.
Oh, wow.
For the year 2445, his base case projection is $13 million per Bitcoin, with a bull case reaching $49 million, and even a bear case still sitting at a remarkable $3 million.
Wow, that's quite a range.
It is, yeah.
But his personal and corporate strategy remains the same, right?
Right.
Accumulate Bitcoin and never sell.
Precisely.
So what's his vision for strategy in all of this?
Well, his vision for strategy is to fundamentally transform capital markets by capitalizing on Bitcoin, which he characterizes as virtuous, clean money, as opposed to, traditional assets. That he sees as offering comparatively lower returns. And he's actively pioneering a new approach to credit by issuing financial instruments like bonds and preferred stock that are backed by Bitcoin holdings. He specifically highlights their convertible bonds, of which they are now the world's largest issuer, and their innovative convertible preferred stock, traded under the ticker STRK, as prime examples of this strategy in action.
Now, this whole thing he describes as a quadratically reflexive financial engineering strategy, that sounds pretty sophisticated.
It is.
I mean, can you break that down?
So what's fascinating here is the idea of creating a reinforcing feedback loop between strategy's financial instruments and the broader adoption and price appreciation of Bitcoin. Think of it this way. By issuing convertible bonds and preferred stock, strategy raises capital, which it then uses to acquire more Bitcoin. As Bitcoin's price rises, the value of their Bitcoin holdings increases, which in turn makes their bonds and preferred stock more attractive to investors, allowing them to raise even more capital and further increase their Bitcoin holdings. So it's this cycle where the different financial elements mutually reinforce each other, driving both Bitcoin adoption and strategy's growth.
So he's addressing the criticisms
Mm.
about Bitcoin's inherent price volatility and the premium sometimes seen in their stock by emphasizing this perpetual nature of their preferred stock and the kind of built-in resilience of this engineered financial structure.
Exactly.
It's really insightful to hear him reflect on some of his past ventures, like this Usher yacht analogy he talks about. I mean, what were the key takeaways there?
Well, the failure of his Usher mobile authentication app, despite, the innovative approach, taught him several valuable lessons.
Okay, like what?
So he realized the dangers of overcomplicating solutions, the importance of simplicity,
Yeah.
and broad distribution for success,
Mm-hmm.
and the humility required to recognize when someone else has a better idea.
And so he actually points to Bitcoin as like a prime example of somebody else's idea. That has become strategy's greatest success.
Yeah.
And it's kind of interesting, right? He's saying it's important to be able to recognize and capitalize on those truly transformative innovations, even if they didn't come from you.
Exactly.
So what advice would he give to a younger version of himself, just starting out?
So his advice centers on embracing the new,
Okay.
paradigm-shifting platforms that emerge in each generation. And currently, he identifies these as digital intelligence, meaning AI, and digital assets.
So Bitcoin.
Primarily Bitcoin, yeah. He stresses the importance of, independent and critical thinking,
Right.
forging your own unique path, and focusing intensely, with laser eyes, as he puts it, on those areas that genuinely interest you, where you possess talent, and where you believe you can contribute to significant global change.
Okay, so he's saying you've got to really find your passion and go all in.
Yeah, and he also cautions against the, Napoleonic complex,
Okay.
the tendency to diversify too broadly after achieving initial success.
Right.
Instead, he advocates for a continued inward focus and a willingness to self-correct along the way.
So it seems like for him, it's not just about the money. It's about leaving a legacy and promoting a certain ideology.
Right. He sees Bitcoin as representing the most certain thing in the financial universe,
Okay.
the stable and unshakable foundation upon which to rebuild and transform traditional finance. And his overarching goal is to promote the principles of sound money, individual sovereignty, economic freedom, and what he calls economic immortality.
So the idea that Bitcoin can preserve economic value and potentially even ideas across generations.
Exactly.
He also brings up this concept of decentralized charity, suggesting that, permanently giving up control of your Bitcoin holdings by burning the private key
Could be an ethically sound alternative to centralized philanthropic organizations.
So kind of like making a pro rata contribution to every other participant in the network.
Right.
It's a really interesting concept.
It is.
What about this trend of corporate treasury adoption of Bitcoin?
So he observes a gradual but growing adoption among corporate treasuries, with around 70 publicly traded companies currently holding Bitcoin on their balance sheets.
Okay.
And he anticipates an acceleration of this trend as major financial institutions develop and offer institutional-grade custody solutions for Bitcoin.
And he expects initial allocations to be relatively modest, in the 5 to 10% range.
Yeah.
And interestingly, he suggests that big tech companies might be among the last to adopt due to their already substantial capital reserves and maybe, less of an immediate need.
Right.
He also notes this generational divide in understanding and acceptance.
With younger generations like Gen Z and millennials generally being more open to Bitcoin as a treasury asset.
So looking even further into the future, what's his overall vision for digital finance?
Well, he foresees a growing global consensus, recognizing Bitcoin as fundamental digital capital and a digital commodity. He anticipates greater regulatory clarity for the other digital asset classes.
So currencies, tokens, and securities.
Right.
Following the establishment of more comprehensive frameworks in the U.S., which he expects within the next 6 to 12 months. And in the long term, he envisions a financial system characterized by millions of different digital assets.
Moving at the speed of light.
Wow.
Significant innovation in the development of user-friendly wallets and exchanges, and the increasing integration of artificial intelligence into finance.
So AI-powered wallets, AI-capitalized financial services, decentralized AI-driven DeFi markets.
Exactly, and he believes this will unleash a period of rapid innovation,
Okay.
a true Cambrian explosion in financial products and services, ultimately leading to, vastly improved offerings for everyone.
Okay, finally. Any books or authors that he recommended?
Yeah, he specifically recommended the works of Murray Rothbard,
Okay.
particularly his writings on Austrian economics and the history of money and banking.
Okay.
He also suggested reading Will and Ariel Durant's comprehensive The Story of Civilization for a broader historical context, and the biographies of significant innovators throughout history, citing figures like J.P. Morgan, Rockefeller, Edison, and Newton as examples of individuals who, shaped the world through their vision and determination.
Okay, so let's recap. We've just gone deep on Michael Saylor's vision for the future of Bitcoin, his proposed framework for classifying all these digital assets, the strategic implications he sees for the United States, and his big vision for a digitally transformed global financial system. He paints this really compelling picture of Bitcoin as like foundational digital capital. It's vital for national security. And he seems to think it's poised to like revolutionize money and finance.
It's a pretty big vision.
It is. And for all of you listening, I hope this deep dive into Saylor's thinking has given you some valuable insights and maybe sparked some new ways of understanding this crazy and rapidly evolving landscape. We've aimed to, provide a clearer picture of these complex ideas and offer some aha moments regarding the potential future of finance and this pivotal role Saylor thinks Bitcoin will play.
Absolutely.
So on that note, consider this. Saylor's ideas around, economic immortality and this whole idea of decentralized charity through Bitcoin raise some pretty profound questions.
Yeah, they do.
What are the long-term implications of, like, economic contributions potentially outlasting you? And how might this option to contribute to the Bitcoin network in this, unique, decentralized way reshape our understanding of wealth, legacy, and giving in the digital age?
Certainly food for thought.
Yeah, and I think this whole space is going to continue to develop and change really rapidly. So thanks for joining us on the Deep Dive. We'll see you next time.